This is Justin Pulitzer. This is my weekend review video for Sunday, July 2nd, 2017. Oddly enough, even on a sleepy holiday weekend, there's a good amount of stuff to cover. So I'm going to talk a little bit about now, the end of the quarter. We've had a lot of, action in the big momentum names. A couple of Fridays ago, I believe there was a large break and then a bit of a recovery, and now they're under a bit of pressure again. I think a lot of that has to do with the end of the quarter and the lock-in of funds in these names. And I'm going to talk a little bit about where I see the indices going. Of course, we're going to talk about the 10 market keys, some of the stocks that relate to that, and some of the momentum stocks. I'm also going to discuss in a little bit more detail how I use my polling data. I often take polls on Twitter, and I think that those of you who know me or follow me for a while kind of have an idea about how I use these tools. I've discussed it briefly in the past, but I think I'm going to start getting a little bit more granular, and we're going to get a little bit more into how I really use them to kind of trade or to profit from setups. And I think that that's going to give you a good insight into my mind and thinking and how to best utilize that, because they really have been a great utility if you're sort of the initiated. I sometimes take for granted that people watch every video and have kind of been with me like from day one, but I know that's not true. I mean, my following is 2/3 higher than it was when I first started this out, and I guess I'm gonna have to start bringing people up to speed a little bit more on that stuff. But let's get into it here. I think that I want to preface this video by saying this. A lot of people aren't fluid. They're not dynamic. They need to see they plan for sort of one outcome, and then if that outcome doesn't materialize, they can't adjust. I'm willing to kind of flip on a dime to be right. I don't necessarily care if my initial thesis is correct. I'm very fine with being incorrect, but I'm not fine staying incorrect. And the only way to become correct is to first stop being incorrect. Think about that a little bit. A lot of people think you're either right or wrong, but there's a subtle stage in between, and that's the flip from either right to wrong or from wrong to right. And I think that being fluid and dynamic and preparing, I guess in your mind, having an idea of what the scenario is that you think will most likely take place and being prepared for that is important. But also having a plan B, and in many cases plan C, for if things go differently, and being able to either jump in and capitalize on that or flip and capitalize on that. I know a lot of people don't have it takes some kind of a mind to flip from being long to short or from short to long, kind of in almost the same keystroke. But at the very least, I think you could avoid a true punishing. Let's say you're long something and it goes through a stop. You could be tempted to kind of just stick with that, or you could do the right thing and stop out, and in some instances even flip and let's say go short. But I'm trying to help people avoid the kind of the worst case scenarios. Anyway, let's get into it. As expected, we're in the low end of the VIX range, and you can see we did have the spike up that I was talking about. It happened a little bit sooner. I don't know. I kind of just drew this in a little arbitrarily, but we basically got what I was looking for. We've had many look aboves and fails, and then we come back down to the lower end of the range. The kind of the subtle danger we have here is that we have a low and now a higher low, and now we're consolidating in the lower end of the range. This triangle is starting to narrow, so at some point, and I'm not saying it's going to be this week or even the week following, it's always possible, but there's a little runway here. But at some point, we're going to break this downtrend, and it's either going to be by price or by time, meaning we just kind of go sideways and it's more of the same. So I don't want to anticipate which that's going to be, but I will say this, is that this spike here is now lower. You have let me draw in the ovals. You have a lower high, and you have these higher lows. So that means volatility is compressing. At some point, there's going to be a breakout of volatility, either up or down. And I'm not a subscriber of single-digit VIX being sustainable. I mean, listen, it's possible this thing wants to hit 7. How sustainable that's going to be is, to me, not. I mean, obviously, the risk in volatility here, in my view, is sideways to higher. So we have to keep an eye on these tops. And if, you see here, we basically had equal highs. Now it's a lower high. We have to see if we're going to start transitioning, making a series of higher lows and a series of higher highs. And then that, to me, would be the shift in the market. But as of now, we're still just muddling around and chopping in range. And the first and foremost would be a sustainable move that could last more than a day or two above the 200-day moving average. Granted that the lower this comes, the easier it's going to be. It's like jumping hurdles in an Olympic race. It's a lot easier to jump a hurdle that's a foot tall than, I'm trying to be a little less offensive in my videos lately. I was going to say midget hurdle jumping. Sorry, I know it's awful, but it's easier to jump a foot-high hurdle than it is, like, let's say, a 5-foot hurdle. So, up here it's a higher hurdle, down here it's a lower hurdle. So, just keep that in mind. So, not too much out of the VIX other than the occasional spike up, the fear move. So, VIX kind of still doing its thing in the low end of range. The dollar. Now, we're getting really, really close to where I want to start buying the dollar for a bounce. You can see at the lower end of the trend line. This looked like it was going to turn. You had a look below and fail with a rally up. Didn't even quite get to the top end of range. By the way, when you have these, the initial buy is right up over the high, and then you really need to see it kind of clear the range high. We didn't even get a 50 MA touch, and we're coming down. We're into this reference spike low, this reference range low, the channel low, and then a measured move off the head and shoulders peak is coming a little bit lower, and it's close to the 78.6. So there could be a little bit more room down in the dollar, and that's my area. Particularly, one of the ways I like to play this is the UUP. That is the dollar ETF. It's sort of like the SPY for the dollar. Now, if you've been following me for a while, I drew in this kind of bracketed range, and I've discussed that moves above and below that range have been unsustainable, although they can spend time down there. You can see we've spent time below here, and we spent a hell of a lot of time up here. We're getting down to the low end of that range, and that is 24.47. That is the key support and the breakdown level. What's interesting to me is that if you take the head and shoulders measured move lower, it is exactly, to the penny, 24.47. So I am going to be a buyer here. I have buy orders lined up, and it's the channel low, and it's the right or right out level. If you're going to jump, again, this is the sort of the midget hurdle jumping analogy. If you're going to jump, it's better to jump from the basement window than from the roof. That's actually a term from my buddy Brad, but it seemed applicable here. So we want to be basement window jumpers rather than, falling off the top of the Nakatomi Plaza like Hans Gruber did in Die Hard. So that's my plan for the dollar. Now, if the dollar is going to rise, that isn't going to play so well, most likely, with precious metals. And I'll say this, we've had a lot of holds here, and I have a lot of people messaging me, why isn't gold getting jiggy? And it's because all that hot money and all those yips who used to chase gold are now chasing Bitcoin and Ethereum. That's sort of like the new gold. Orange is the new black, I guess, and Bitcoin is the new gold, and Ethereum is the new silver. So look at this. You're holding the 200 MA. I had talked about a 200 MA bounce. We kind of got it. It just stalled on the 50, which is now declining. This area is very key to me. If we're looking for a right or right out play, it's right near the kind of regression line. It's the trend channel here that's been... A lot of people make the mistake of drawing like this. This is really where you do it. After you've had a gap up, you could either use that gap low or like the bounce low. And this is how you draw. This is the proper way to draw it. Now, so there could be a move down here. This would be a right or right out long area for me. If that is to snap, though, we could start filling up triangles down to, reference lows. So just be a little bit cautious in that regard. This is sort of a double top, and if you were to lose this low, it would not be pretty technically. I mean, technically that would confirm the double top. So I'm looking for right or right out in the 16 sort of area, 17 sort of area, 117 area, for a quick play. If that were to break, I'd probably be looking for some kind of a put ratio, like buying these and like selling 2 times out of the money down in like the 13 same week or next week, most likely. Silver. Now, silver could go lower, right? There's the 13s. I like to sell like 15 or below out of the money puts, longer dated, to sort of build a position into this. And I had talked about, I had actually been underwater on short 17 puts here, and I talked about booking those and some of the 15s that I had told about adding down here into here. So that scratch on the 17s worked out. It was actually even a small gain, and the 15s was a big win. And now we're interested in selling out of the money puts again in that area. Silver also, if growth picks up, it has a growth component because it's an industrial metal, unlike gold, and that would be a tailwind. Also, if gold is really going to rally, silver is sort of the levered version of it. It's the poor man's gold, and that would probably have larger percentage gains in the kind of the back half of the back nine of the course, so to speak, than gold would. Initially, gold gets the move, and then silver plays catch up and then exceeds gold because it's the speculative, it's a cheaper way to speculate. Bitcoin, the aforementioned Bitcoin I mentioned, is in a triangle. Notice I used the lower high for the downtrend line and the kind of like pullback low here for the uptrend, and it's been respecting that very well. If this breaks, you would probably at the very least see the 50 MA and maybe a revisit of these lows and potentially the breakout area, where I think would be a good right or right out area. I was actually hoping for this was going to touch down here. I had a bit of a buy bias in here, right by the 50 MA, right by the 61.8, right by the breakout level. Unfortunately, it didn't play out that way. I don't know if I'd love it as much this time because it would be a move below the 50 MA. And I like when I play setups, it's all about lining up the probabilities, right? Like a 61.8 and a 50 MA retrace with a breakout are 3 things, and it would be basically like a look below trend. So you have like 3 to arguably 4 things working in your favor. Here now you would basically just have 2. So, and it would just be slightly lower than here. So we're going to have to see how this transitions into if there's a play or not. If this does wind up breaking, there are lower levels that could be, wind up coming into play, like 100 MAs. So we'll have to see. My guess, though, is that this 50 MA will support. It would be the first test, official test, and the breakdown might be a little bit harder to kind of accomplish. But I will say this, for a right or right out play, I do like either long above the downtrend or short below the uptrend, the triangle. Let's pick up the pace. TLT. All right, so I was saying I thought we could potentially see this gap fill, but I was saying we were likely going to see a pullback first, and we're now getting it. We've retested the breakout area, and we're kind of spending some time here. Now, my theory here is this, is you have 2 days, roughly equal lows, a move above the 2-day high. If you want to be aggressive, you could just use Friday's range, the high. A move above those highs, I think, would have a bounce. If they're more than likely, though, a move below the lows, I think, would be a quick short for the gap fill here and a retest of the 50 and 200 MA confluence, which would be getting close to the channel low, and I'd be looking for a row long, actually, for a further bounce play. You could also see that would be close to the 100 MA. So there's, again, a lot of, and look where this is. This would be the 2009 crash peak, which was resistance here, sort of resistance-y here. We spent some time there. So this should now be support, right? I'm looking for a long setup into this range. If you're short, you'd be looking for like buy these puts or buy these puts and then like sell 2 times out of the money lower for like a chicken little way to go lower. The utilities. Now these are starting to roll over a bit. Remember I said that negating the head and shoulders pattern was bullish, but we were coming to a channel high. I don't want to go in my Wayback Machine, but this is a very long high, and I said I didn't think people would see this, but we did, and said that this was going to be where the inflection point was, and it sure has been. We've now broken trend, and we're right on 100 MA. This is basically the breakout of this range. It wouldn't surprise me to see some type of a rally check back, but I would be more interested in a buyer. I don't necessarily know if we have to wait until the channel low, which is all the way down here. We are still in an uptrend within an up channel. So what I'm thinking is if there is some kind of a pullback to like the 50 or the 61.8, I'd be looking to sell puts down near these reference lows and the channel, the trend within the channel low, if that makes sense. Maybe I should show this. I think it would maybe bring it into context a little bit more, like 15-year monthly. Like take a look at this. Oopsie daisy. All right. So look, you got this defined channel, right? And you have a trend within the channel. You're coming from the all-time high, and if the first check back here, which has been support so many times, and you have a 50-month moving average right below it, would be an interesting out-of-the-money put sale opportunity. Keep in mind, these are sort of like bond equivalents. They don't really trade like biotech stocks or, this isn't Amazon. So these areas in here, if there were further weakness, like for example, when I think if we hold hundreds, we bounce to 50s. If we lose hundreds, we go to 200s. So that lines up with the 50% fib, and the 61.8 is just a little bit below there. So I would venture to bet it's also a high volume node or a volume distribution. Hey, looky here. This is the high volume node, and this is the volume distribution. So that area to me would be an interesting targeting point. If you want to play it the Chicken Little way, you buy these puts, sell 2 times, or even a little bit more of an overshoot. Look at the 200 MA. Was all this resistance? It should now be support. So that's my take on the utilities. HIG, HYG, this is the high yield. You remember, we need to see this to get scared of recession. We're banging along around the highs. So this, to me, this got a lot of people nervous. I said I thought we were just kind of up at highs, responding. We're kind of back up over it. As long as we're over this high, this 88.16, it's okay. We're basically riding the lightning on the 50 MA here. If we were to lose the 50, I think we would re-see the 100. And then if we lost the 100, we would see the 200. But look, that's just range low. So this to me is all just range consolidation. The Fed watches this, by the way. That's why it's in my 10 market keys. So that's a feather in the cap for the Fed for rate hikes if high yield is kind of behaving well. Now, one of the reasons high yield has had trouble is oil. Remember when high yield was in all the trouble, it was that kind of situation. I think a lot of these firms now have used this move up here into like the high to mid 50s to sell forwards and futures against their oil positions. So and to pay down debt or whatever. There were some bankruptcies. There may be some more, but I think that oil has broken. And I kind of said I was having a bit of a bias in the oil. If you remember my last weekend video, I said that I didn't know whether we were going to be in $10, $12 decline areas, and if that was so, the 42s would hold, or if we were going to see the $24 to $25 sell-off down into like the 37s, 35s, 37s. And I said that I thought, we'll see. I said at the very least, I thought we were going to chop to the channel high, that I thought oil was going to be sideways to higher for the week, and it turned out to, and it wound up being really actually kind of a monster. I think the lock-in that took place, like let's say in Amazon, was the opposite in oil. All these guys who were short oil were locking in their profits, meaning covering their shorts. So that pushed oil up. Now we're above a 20 MA, so and the 38 too. So we should probably see the 50 MA and the 50% fib of the range, which coincides right around 47. That was also this kind of key breakdown level. So this area to me seems possible. I think the kind of max move would be up to like 48s. Maybe it squeezes into 49s. But that was the old uptrend, up channel. That to me would be a great right or right out short particularly if it lined up with the 100 MA, which, look, was all this resistance here. So keep an eye on that. I do think that there could be a little more up in oil, but it might not be like a ton, $2 to $3. XLE, we were talking about a bounce area, and I said that I thought this range low was an opportunity to sell maybe some out-of-the-money puts near the gap fill level on the 61.8, which is down at like 61.62. I'm sorry, 60.82. We're right up against the downtrend, and I think that the 50 MA has been a lot of problems. So any move up to the 50, like if it was the gap fill, would be an ideal right or right out short. If we were to clear that, maybe we could see 100 MA, maybe a 200, but up here is sort of where I think the resistance would be. So what I like doing now is selling out like a strangle, selling like out of the money calls, out of the money puts, maybe longer dated to kind of establish a position. Like if you're looking to re-short oil up into this breakdown and old resistance area, to me makes sense. And if you're looking to buy oil down in this lower area, to me, oil stocks, that area makes sense too. Keep in mind, there's a lot of yield in this. Exxon, how is Exxon behaving? So this could be, this could be forming the inverse head and shoulders. I can't tell you it is or it isn't. Look, we have a left shoulder here, the head, and the right shoulder here. So this has been acting okay. This Thursday range to me, which was sort of the big kind of reversal day, and then the Friday range was not particularly good. It kind of closed down near the lows. So I would say you could use Thursday's range, which is like the 50 MA, 100 MA confluence here. So I would be interested in long over 81.84 for a move up to like 83s, maybe 84. Or a short below for maybe a retest of the lows, which if they gave, maybe we would finally get our move down to the 61.8 and the 77s and the channel low, where I do think where would be a great opportunity to sell out of the money puts, maybe 75 strikes or below. China. This has just been bouncing around. Remember, I wanted to show you this while we're on the longer chart. I had said this area, which was the breakdown, was going to be the resistance, and it was, right? It's not a pretty situation. I've redrawn in the fib differently this week. Originally, it was from here, I believe, up, but I've now used the channel low to here. So the 50% is down, look, where the channel low is and these reference lows. So keep an eye on this. If we were to lose the 50 and the 100, maybe we would come down to the 200. This was a lot of resistance initially. It should be support now. So I like this Thursday range. Look, you have the 2-day high. So above those 2-day highs, I like long for a move up to this high. Below this low, I think you could at the very least see the 100 and maybe even the 200. So I like this 2-day range as a gauge. Baba got into, not Baba. We want Baba. Not that fake Bob. We want the real Baba. Anyway, so check this out. We're forming a wedge. This Thursday range, similar to the FXI, is key. It basically was a 20 MA hold, which has been the support, right? So I think Baba, now we have a lower high situation and a higher low. We're in compression. This could just chop for a while. But a break either up is a long or a break down, to me, would be a short. At the very least to the reference highs and lows, and potentially to the gap fill 50 MA area. So I'm watching that, particularly the 20 MA. That's really your stop. I think Thursday low is a good stop. I had mentioned, though, that I thought we would see right up here into this range. We actually pushed a little higher, but I had mentioned this in a prior video about maybe booking some profits into there, and I still think it's a little prescient. But this seems to be hanging out high and tight. It is a bull flag, technically, right? This is a flag pattern after an up move. So you technically have a bull flag. A lot of this is going to depend on the overall market, and we're going to get into that soon. BIDU is just the same BS. It's just really chopping around in range. This is really the true range low. So if you were to lose, like if you want to play this and you're bullish, and they have earnings coming up, I think you could either buy put ratios, meaning like buy these, sell 2 times out of the money here, or just sell these, like if you think it's going to resolve higher. I'm not so convinced it will, This was technically a lot of a look above and fail. Maybe we have a move down to range low. So this area to me is potentially where to target as long as we're below the 50 MA. A move back, look, this was the failure. You need to clear the 50 in my view for higher. So that is the BIDU. The IBB, we were bullish on that. It turned out to be quite spectacular, but it stalled where we said, right? When I say we, I mean me. The kind of the measured move I had put in to the gap fill. And now we're rolling back, right? This was a look above the channel high. Now we're rolling back. So isn't this bearish now? Short, it depends on your time frame. I mean, yeah, this could roll back a little bit more and retest this breakout area. Believe it or not, this could even roll back as far as this downtrend line and like retest here and still be looking okay. I mean, this to me was the real true breakout, right? You got over the high and now you're just kind of listing lower. So I'm looking to buy Biotech now, but on the dips. And I had talked about booking some Gilead, and we'll get to that in a moment. So if you're a chicken little with this and you want to be long Biotech and you see it pulling back, sell some out of the money puts below this 50 and 100 MA area, maybe even as close to the 200 as possible. That's riding the channel low now, right? So like if we were to come all the way down to channel low, you'd still be kind of okay. If you're looking for the short, buy like these and like sell 2 times out of the money down here. I might actually put that on. I kind of like that play as a hedge or some protection against an overall Nasdaq market move. Gilead. All right, so I said I thought we would see the 200. I said to book it right here. We saw a little bit more, but we're now kind of consolidating. I do think that there could be, if Biotech does gain some Momo again, we could see the full gap fill and the downtrend line. But the easy money, remember we talked on this day, the reversal day, is now made. Truth be told, I had been short puts for a while in this and had been waiting for a move up. I also don't love it as much rallying into the earnings. What I would love to see now, though, would be like some sideways action on the earnings, see it break the downtrend, and then you just buy it. Or there be some kind of a washout back down to like the 50 MA and then buy it. So I either want to be long on the 50 MA or long on a break above the downtrend line now with Gilead. So that's my Gilead analysis. Bristol Myers. Someone asked me about this the other day. Look, check back. Come on. This was the reference area, right? We've had a bunch of moves to there. It's been resistance. We're now pulling back. Again, I think this looks fine. There's no real damage in the chart in my view here. And look at this. It doesn't get any prettier than this. You have a 100, a 50, a 20, a 200. All the moving averages are down here. So as you come down into here, sell out of the money puts at the reference kind of lows. I think that this area to me is a opportunity to, look, this was a look below it range, now a look above, and now we're kind of coming back mid-range. This area to me would be the area to sell some out of the money puts into, or buy the stock if you want right or right out. Oops. Hard to get bearish on the market when the IYT is repairing. Now, this I had said was a very big key into the market. This was, look at this, a move down to the lower end of range. I think a lot of people got short here. You had this kind of look below and fail, and now where you've seen the range, we're coming up to the range high. And look what was negated. This was a lower right shoulder, and we have consolidated. In last week's video, I said this was still a long as long as we held that area, and we're up. As bearish as whatever the close in this week was, people think Friday was, this is almost up to the highs. I don't know how much higher it will have. I think this will be similar to XLU, where we could take out the high and get the channel high and suck a lot of people in here, and they won't realize they're getting in bad location. But remember what I said, that there's a way to consolidate by time or by price. What does this look like to you? Does this look like a time consolidation or a price consolidation? The correct answer, of course, is time consolidation. So this is still overall a little bullish. So yeah, you want to book some profits into here, but overall the pattern is still fine. As long as you're above the 50 and 100 MA, it's all right. That's basically the range low. So if you want to, if there's any weakness, you could sell some out of the money puts below there. Mid-range, probably if you got down to mid-range, you'd want to, be looking for the lower end. And look, that's the 200 MA now. So This still looks fine to me. Hard to get bearish when FedEx is at a new all-time high on Friday. Again, look at this. Is this a time or price consolidation? You broke the trend. It didn't lose the range low. A little noise below it. Look below and fail. All-time highs. Again, time consolidation. Keep that in mind when we talk about the Nasdaq, because that's going to be a very big question that we're going to pose. The bad news is that there is maybe a little bit more up, but it's not a ton. The 1.618 is here. I'm going to this week draw in a 2 times, let's do it now. Why not? This is so annoying because it, I don't know why I didn't plan this, because this is really an important piece of analysis as well. What was the low in here? 182. Blink 182, right? If you blinked, you missed it. So it's $18.68. This is, again, I always find this useful because I can show you guys how I do my analysis. 18.68 range. Now we take that area and we add it to the top here, right? So we add that to 201.57, and that's 220.25. So we're close. Like I said, we're close to there, and the 1.618 of a larger range. So I do think that there could be some more up moves, but I do like booking profits into that up move, that aforementioned up move. So that's FedEx. Copper. Now, again, copper is in a bull flag. A lot of people were like, oh, copper's rolling over. And I said, no. I said, this is a bull flag. And now you're broke trend. And you're making higher lows and higher highs. Is that recession? No. It's bullish. Still in a big consolidation range. More by time than by price. This looks fine to me. The financials. Now, this is also not bearish. Again, this is a huge part of what leads to recessions when banks and stuff get in trouble. Financial crisis, right? You have a head and shoulders pattern. It was fully negated, a pullback, a check back. I remember I said this was still fine as long as we held here, or at least to the 50-100 MA confluence, and back up through a higher high. So you have higher lows and now higher highs, almost to the all-time high. Hard to be super-duper bearish. JPM, again, I remember I said this was lagging a little, but now it's leading. You broke through the tweezers that I said were the keys to the kingdom and the range high. Yeah, this could roll back and pull back a little, but I mean, in my view, it's only a matter of time until it makes a new high. Looks bullish. I'm long this. I had sold some out of the money puts when I saw this consolidation, and still holding above the 50 MA. So JPM looks okay. I think at some point this stock will see a hundo. Blackstone. This is one that isn't talked about that much, but will benefit from Trump policies, and they have a decent dividend. Look at this. Again, a time consolidation. A gap up that held that is now consolidating. I don't know how much more this has. I've done some projections. There's a 61.8 retracement of an entire range, meaning this had been higher at one point. And then you have 2 times ranges depending where you calculate. So somewhere between 34.93 and 36.73 would be the area to bail. Right now I'm long call spreads and short puts as my long proxy. I had been in, I believe, before this. I was either in before the breakout or I think maybe right at the, I'm not sure. I actually would have to go back and look at my fills. I've been playing this stock for a while. I had originally been short puts, which expired, and then I used that kind of cushion to sell more puts and buy call spreads. So this is doing well, and I'm just looking for that kind of pop to sell into. SPY. All right, so let's get into the SPY. First and foremost, let's talk about my polling and sentiment gauge. This was last week, and this is this week. This week had a bigger sample size, so it's probably a little bit more accurate, but I think they're both pretty accurate. Good. So here's a good piece of information. The people who thought we'd be flat are the same. The people who thought we'd be up last week were 52 versus 26. And remember when I said we're above 50, it tends to be, first of all, when you're above 70, it usually signals correction. When you're above 50, it usually means chop. But when you're below 50, it means you could have a rally, potentially. Now, or at least the downside could be minimized. This is a 9-point flip, a direct flip from bulls to bears, right? From 26 to 35, from 52 down to 43. So sentiment, while people are still a little bit more bullish, they're below the 50% level, which is good. I'm going to start plotting this. I want to start really keeping track of this because this has been very key and pivotal in my trading. I know when people are, it's like Santa Claus. I know when you've been naughty and nice. I know when you're overly bullish. I know when you're moderately, and I know when sentiment is starting to get weak. This is a good situation for, coming into a week that could potentially be a little iffy. We'll talk about that a little bit more in the coming weeks. So that said, let's get into SPY. Now, SPY looks weaker because it went ex-dividend. It looks weaker than it should. It would help if I could zoom properly. Oh, boy. All right, so look at this. We're in a very narrow consolidation band. Now, I'll be the first to say this. This day, once we took out this high, I thought we would see the channel high and potentially the all-time high and maybe even a new high. We did go higher in after hours, but we didn't see it RTH, regular trading hours. And instead, we got a liquidation break, which turned into a big kind of move. But remember what I said? I said I thought we had a 50 MA and we had a range, and it was sort of a look below and fail, right? You looked in, and prices bounced higher. Friday's close wasn't particularly great, but I don't read too much into that. That was the end of the quarter. This day's range, though, is very important now because you have excess on the low and you have poor highs in here. So a move above these 2-day highs now, I would say, would be maybe quite violent higher. This would encompass this down. All the people who bought here now who are wrong. If they're now right, this should go up a lot. The expected move this week is $2.48, so that would be $244.28 or down to $239.32, which is basically a retest of these lows and the channel low. So this, the move is down and there's 100 MA here and a 50% fib and all that. So if there is a move down, it might be a little bit more muted than bears are kind of hoping for. I mean, the gap fill is sort of like my max risk at this point. This was also kind of a breakout area, point of contention. Gap fill in 61.8. That would be a trend break, so maybe it would come down to here, bounce up, and then maybe roll. Or listen, I'm just giving some scenarios. As of now, though, this is, again, more of a time consolidation than a price consolidation, meaning this is a price event. This is a time event at the moment. We're still in the confines of this kind of topping. It is a bit of a topping pattern, right? We're getting these 100% violent retracements. But like I said, there are some signs in the financials, a potential rally now in energy, and the transports all looking okay. The thing that I think has been weighing on this has been people who are, into tech. So this day's range to me is the key. Very, very key. Now, if you look at this SPX, the cash, remember I drew in that diamond pattern? We had the look above and fail, and I said that if this is to act properly, we should now have a move to the lower end of the range, correct? So this got us to the lower end, and then we bounced, and then this got us through the lower end, a look below and potentially a look below and fail now, because look, this is the range we're using. So we now have a potential look below and fail with a 50 MA hold, and now bounced up, right? So again, this day's range is very key. If you're very short term, I suppose you can use this second, this inside day. Below that low is not as good, above that high is better. So if you're right or right out and you want to be, quick on the draw, I think you could use this day's range as a starting position. Like below here, you'd be short. And then below here, you'd be looking to add, right? Because below 50 MA on a second try could get 100 MA, and that would be a gap fill, right? And basically a channel touch. Above this day's high, I think you could be long, and then you'd be looking to add above this day's high with a stop, right? You'd be raising a stop. This could potentially be, the high end of the range where maybe this move ends, and you'd be adding maybe at a bad time or whatever, but for me, that's how I would trade it. This day's range to me is the key now. Long above and short below. And if you're quick, you could start with Friday's range, which is narrow, which is always good. So often people say, okay, I now shorted the low. Where's my stop? All right. So the answer to that for me would be you don't want to, or you're long above, where would the stop be? You wouldn't want to see it more than halfway through the range, which happens to coincide with this day's range. So you could use the extremes of that day's range as your gauge. Expected move is $2.48. I said so up to 244.28 or down to 239.32. IWM. Expected move is $2.18 up to 143.10 or down to 138.74. But what's going on here? Is this a bullish or bearish pattern? This is, you've got to say, a little bit more bullish, right? We're still up in the upper part. We're still above the breakout, and we're above the 10 and 20, and we never even got a 50 MA test. This day, again, is a big range. This is basically kind of a range low. We didn't quite fully get there, but I would say you could be, using this Thursday's day's range as a gauge. It's a very big day, right? It encompasses a lot of trade. Below these two lows, I don't know if the 50 would hold necessarily. Maybe you go straight to the 100, which is down near the 50% fib. Above these highs, though, I think that would, at the very least, re-challenge the old one. This, to me, was a bit of a look above and fail. The pullback has been shallow, and you have now equal kind of highs here. If this is taken and run, where do you think all the stops are sitting? Above this high. It would move up. So that's my take. So IWM not quite as bearish. This is where all the action and fear has been. Fear and loathing, kind of. We have a channel, a defined channel. We have a very long uptrend, and we have a channel. And we had a look below and fail. We went back up with 2 days roughly of equal range, and now we're below and kind of listing down. So this is, of course, terribly bearish, right? Kinda, but not full on just yet. And I'll say why. First of all, my concern here is that, yeah, it's a bit of a head and shoulders, but I really see it more of just poor highs, liquidation break, rally to a lower high, though. And now we took these lows out. There is something interesting, though, to be noted. And we're going to get to the time correction in a moment, but let's first talk about price action. These hammers here are very pronounced, and a move below there should have been a cascade. This should have been weaker than it was. And then Friday, it closed weak, but it was still above kind of the reference lows. So Friday, but we are below the channel, and we are below the 50 MA, and you have a rolling over 20 MA. So the pattern is shifting more bearish, right? Lower lows off lower highs, but still in the context of controlled price action and in a very large range. Now, if this were to break Friday, first of all, I like Thursday's range as a key, because look, that would take you above the 50 MA and back up above the channel. If that were to clear, these highs probably are where all the stops are sitting, and this would go considerably up. Because everyone's expecting the move to go down. I believe people are expecting the move to be down, as am I even. So if we're to be wrong, or the move to be wrong, this would be the place above these highs. This is a bit of a concerning pattern, but I will say this: was a very prominent breakout. It's a gap fill, and if we are to move to the channel low, this area will be I think the first bounce point. We'd probably check back and then maybe go. But I want to propose to you that this is also a very real possibility, that we're in a very large chop pattern. At times, imagine if you came from the range high in a straight move down here. This was a look below and fail, by the way. Excuse me. At times, this pattern looked very, very bearish, like this. I mean, I'm sure people down here were like, "Oh my God, it's over, right? It's all coming to an end." This is a very real possibility that there's a very large time correction that could be taking place here. We had a large run up, and we could be into one of these sideways patterns that could last a really long time. So, while this is looking like it's starting to roll over, it could be one of these. Just keep that in mind. This is a very real scenario that we saw for a while. This lasted a long time in the Nasdaq, right? This was from 726 to January. I mean, for crying out loud, this is a very long consolidation. So this could be the case now. Keep in mind all these FANG names have run huge. Maybe they just need a little bit of time to either consolidate sideways or maybe even a little pullback. The dominant trend, though, the big trend, is still up. Just keep that in mind. The big trend is still to the upside. Could this be topping out? Yep, very possible. I'm going to show you some charts and some of the big tech names that maybe you might not sleep so well tonight on. But we'll talk about that. But as of now, the reference range levels with 100 MA right below and a channel low right below has not really fallen apart completely. This is the early signs of weakness. You had a big move down, 2 big days down, 100% retracement with a look below and fail. And then the next day was a move down below those lows, and you still closed below that range. You need to get price, in my view, for the bulls, accepting back into this range and above the 50 MA to be bullish. Below there, to me, is going to remain iffy, and I think you could use Friday and Thursday's ranges as gauges for initial entries and for adding position. This is very, very key. The expected move is $2.52, so up to 140.16 or down to 135.13. Let's get into some price action that has me a little bit concerned. First and foremost is, let's just do the indice, the SOX. This is also, again, a lower high and down into the 61.8 with the gap fill just and the 100 MA right below. So we're lingering around below the channel. Maybe this gets a little bit more. You have a lot of gap fills down here. The regression line is down near this reference low. I mean, if this Friday, I'm going to use Thursday's range. If we lose Thursday's range, I don't know. We're real close to that 100 MA, and if we lose the 100, 200s are in play, and that would roughly be here at the time when it reaches there. If you get back up above Thursday's high, this action would be look below and fail. You'd be back up above a 50 MA, and you'd probably fill the gap here at maybe the least to the 20 MA. Now, I want to show you one of the reasons why I'm a little bit cautious on the Nasdaq and why I'm cautious in general, and that's this Micron Technologies. They reported a good quarter. They beat on both the top and the bottom line. There's supposedly some hair on the quarter. To me, the numbers looked fine. Again, no damage just yet. You're right on trend, right on a 50 MA. This, to me, though, is looking double top-ish. And if we lose a 50, I think we could see the 100 MA in this range, somewhere in this range low. I probably should have extended this down a little bit more. But at the very least, into these lows. If you lose this, I think there's a move lower. So this Friday's day range is key. Above the high, I would say, is long, and these is where all the stops are probably waiting. So above that high, I think would go higher. Below this low, though, and these lows, I think people would have their stops, and you would get a flush down into these reference lows down closer to the 26s. I like put spreads or put ratios or whatever you want to do for that play, if that were to be the move. NVIDIA. Again, very similar pattern of a lower high and now kind of at range low and threatening to break, right? So what is going to be with NVIDIA? Is this going to, look at this. We had, again, more of a time correction here. This to me was looking awful, by the way. All these touches down here, you still never negated trend, and then, gap and go, and now usually you get these, and then there's some kind of a pullback into the range. So you have a gap fill and a 50 MA down around 136. I think kind of the max pullback for me with this would be down and to retest this breakout in the 119. So if you're bearish on this, or if you want to play, Chicken Little, and listen, I definitely like to be a Chicken Little sometimes. I like to buy these kind of puts, and then like sell 2 times out of the money either at that area or down near closer to the trend. But I do think that that check back area will hold at least the first time. But again, I'm mindful that we're now coming. Remember I said after a move down, the initial move is kind of okay but this was really not even a move down, right? It was like one day and then you're back up. But this is a little cautious. I think this is going to just be really choppy in this range. I think the play here is probably sideways to lower, but I don't think it's just going to completely collapse until the very least the earnings. So I think if there's a larger down move into the earnings that gets everyone nervous, there'll probably be some kind of a rally leg on the earnings. If we're remaining high and we make new highs, we'll see. All right, so that was the semis, right? Now this chart is not looking particularly hot either at the moment. Apple. This is the important one too, right? For the Qs, we're below the trend. Look at this. This was the move, and we've just been. This is a bear flag, right? We're bear flagging. The 100 MA is very key. We're kind of there was an old channel that formed a new channel, so we're technically kind of still okay because we're above it. And the first touch usually is the buy. Sometimes there's a look in and then there's a bounce, but this area is important. If this were to fail, like we lose these lows, where would my targets be? 134.54, which was an old reference high, which was in a breakout area, which would be very normal to retest, and maybe down into this gap range around the 130s. So I would say 135 and 130. I mean, maybe you get down into this full area. I know there's a gap fill down here, but I don't know if that's going to fill so quickly without the earnings. And I'll tell you this, the more this comes down and the more panicky it gets ahead of the earnings, the better it starts looking. Anyway, let's keep it simple. Below 146.02 to me is iffy. I drew that level in here. That's this big day's low of day. Moves into it have been sold and we're below it. So you really need to get, in my view, back up over that level to start firming. And a move over 148.28 would, there's a gap fill up here. There's a 50 MA up here. There's some decent resistance, and this could be forming, the proverbial head and shoulders. But we'll have to see how this plays out. So Apple looking a little bit iffy here, a little bit. Curious to see how this plays out next week. The quarter is a little bit weird because Monday we have trading, but Tuesday's off, and a lot of the big boys are going to take Monday off. So I'm a little weird that next week could not be a conclusive week. Like we could be down or whatever, but I feel like the following week is going to be the one that's really the more conclusive one. Amazon, I said I thought we were going to be in a very large chop range because you had this flash crash and it's a big range. You got a mini look above and fail. 50 MA has been what's held, right? That's been the key. We're basically right on it, and you're right at the earnings gap high of day, the 965. So if this holds, we'll go sideways to higher. If we lose these lows, we'll likely come down and retest these lows, around the 945, and potentially retest the kind of the up channel, the steeper up of the up channels, down near these lows. The earnings day low of day was 910. So that's where the 100 MA is. So like if we lost the 50, how I say we lose 50s, we see hundreds. So wherever that 100 is, it could, by the time it gets there, be the lower end of this range. I think this is just going to be a big consolidation for a while. And this is one that it's still bullish, overall the pattern is, we're above the trends, but, probably got a little bit overdone and is looking for a little bit of consolidation, sideways chop. So I am expecting this to be sideways for a while, and, this 50 MA is very key. If we lose it, I would say you'd come down to this trend, and if that, area is lost, this area is very key to me, in my view. This was where the breakout was. This is where this reference low is. This is where the 100 MA is. This area is very critical. I like put ratios same week. Facebook. This looks fine. A couple of issues, though, is this. One, this was a look above and fail. yeah, this big bar, a move above there, we should have seen a little bit higher. It was a look above and fail, and now we're coming back down. You're still on a kind of a trend low. The 50 MA is holding this. I don't know if this is going to set up to be a secure low. A low bookended by two roughly equal higher lows. A move above 52.5 to me would be kind of more bullish. If you lose these lows, though, I could, if we lose 50s, I think we see hundreds, and look where the 100 is, right down at the kind of the range low at the 144s. So, I like a right or right out short on a break of the 50 MA for a move to the 100 MA, or a move up over these 2-day highs for a move back up to the high of the range. Very simple. But overall, the pattern is still sort of all right. Netflix, we got my upper, listen, I hate to be and I told you so, but I prepared everyone for this. I talked about 1.618, I talked about measured moves, and I had said my ideal range, my end target here was going to be right in the middle at 166.22. We got 166.87, and it kaplunk, came back down. We've spent a lot of time now, kind of trying to hold this trend. We're right a little bit below the 100 MA, so we lose 50s, we see hundreds. If we lose hundreds, we could see 200s, maybe. That's kind of close to the gap fill and the channel low. There's also a key level here, a 143s. This is kind of close, so I don't know. There's a lot of chop in here, so if there is a move down, these would be my targets, 143s and 133s, I guess. So maybe the next 10 to 20 points could be a little bit lower. Have to see how that plays out. For me to be more bullish on this, I would need to see a move back up above the 50 MA. Look, gap down, and we spent a lot of time trying to, hold it, and now we're below it. So I'm very iffy on these stocks now because you had moves down, rallies to lower highs, and now, threatening new lows. So, yeah, and this, to me, again, I don't want to freak anyone out, though. All these charts look alike, They all look like head and shoulders or lower highs, I'll say this, like in the financials, like in the transports, if you could take out these lower highs, the stocks all will move up. So you could either be in my view, I'd be interested in buying lower or higher above the recent lower high. Google. We discussed very clearly in the last couple of videos, I had said that we had an old progression line. We were above it, and now we're coming back to retest it, and it's right near the reference low. You have a 100 MA and a gap fill right below, and then a trend within a channel, and then a channel low. So for day traders, somewhere between the regression and the gap fill is probably a right or right out long for a bounce. Or you can do, put ratios. I don't love that we're so close. I would have loved this to just come straight down. But it seems to me like this area and maybe the gap fill could get tested. If you can take out the 50 MA, we're probably back to the upside for a retest of, the wedge low. We have a wedge here. We're now below it. If we get back into it, it could be a look above and a look below and fail, and then we could retest the wedge high and maybe fill the gap. But as long as we're below there, these levels to me are what makes sense. And what I love about this trend is it's riding the lightning right around the 200 MA. So and this area, look at all of these reference highs and gap fill and breakout. They're all down here. So if this were to come down hard and fast into here, what would I be looking to do? Selling out of the money puts down into like this area, or down even as low as the channel low, right? If this were to have like basically a $150 move or whatever off the highs, I'd assume that even if it were to continue cascading down here, it would be supported. So this is what I'm looking to do as this comes into here and maybe here to sell some out of the money puts. For that move, though, I could buy these puts and then like sell 2 times out of the money down there, short term, same week or next week at max. Tesla. All right, so I had been a very big Tesla bull. I still am to some degree. I had said I thought 396 to 400 was going to be the kind of the max, and I had said to start booking some profits. So we broke the trend. I had tweeted I booked some profits, right? I said I took off some worn down. What the are going on here? Said I booked some of the short out of the money puts. We came down low. I was still in some, and then the next day we had a nice rally, still in it. This day, however, I wasn't thrilled at the price action. We came down below these 2-day lows, and I was actually a little angry at myself because I had a note for a stop here, but I didn't take it immediately. I was busy with some other stuff. And then we came down, and then when we bounced, that when I saw the volatility crush, I booked the balance of them. So I'm not in any Tesla position at the moment. What I would be looking to do for Tesla, though, I know Musk is coming out with some kind of news today, and maybe it's a sell the news event because this is held up well, or we'll see, is somewhere down into this area between the 50 and the retest of the breakout around 325. This area, I think, is going to be some solid support. There's also a trend line a little bit lower. So as we come into there, if the move is down, like if we lose Thursday's low, I'd assume we'd see the 50 quickly, maybe here. I'd be looking to sell some out of the money puts at below 300 strikes. This was the big point of contention, the old reference all-time high and the breakout, and I think this area would be safe to sell out of the money puts into. I think that area will support. If we take out Thursday's high of day, and these 2 days, there's going to be a squeeze up, and we'll probably see those upper fib extensions. And I think you can buy stop it up over these highs. So short below here or long above here. Keep it real simple. Getting close to the end, don't worry. Nike. Now, here's an example. I had been in short puts, had the stock put to me, booked it on this move up here, right? Wait, no, it was here. I'm sorry, it was short puts here, had it put to me, booked it on the move up into here. Now, this was a gap and go. I actually sold puts on the gap up, and why did I do that? First and foremost, I had a little poll that I took on this, right? Look at how many people were bearish. 56% of people thought it was going to go lower, and they're now all wrong. So when I see stocks gap in the direction, if they're right, like if this was 56 or 70, whatever, I would think that would be a fade. But when it's the other way, it's a go with. Okay? So that was my thought here, and I sold puts and it went up. Now, what's my thought on Nike now? This is the range it's been in, right? Now we're up to the upper part of the range. So can this keep going? Will it fall back? I think it could do either. I want to see how it plays out the next few days. My guess is it'll probably list up higher because this is now a brand retailer that is good, and we're in short supply of those. So I think Nike will be a go-to by the dip long. If you're a Chicken Little, and I have no problem being one of those, sell some out of the money puts, 55s to 53s. That's where all the moving averages are and the reference highs. So I think that would work on any dip. I like doing that. Lululemon. All right, so I want to caution. This is a cautionary tale here. Look at this. A gap up, sell off, gap up, sell off, and now a gap up, and we're above the downtrend. There's a couple of things, though, that I want to caution people about. One is that we're at a 50% fib, and the start of the old volume distribution is just a little bit higher, and there's a 61.8 just above it. So this might go a little bit more. I don't know if you're going to get the full gap fill this kind of time. What I think is more likely is that there will be a pullback, and then later on you get it. So I'm thinking that you could probably play buy the dip in this as long as we hold the 100 MA. Like if you want to sell out of the money puts now at the 50 MA strike and below, I think that those will work on a pullback. Costco, I had sold some puts in this on the 200 MA day. I worked initially, and then I kind of stopped out. I didn't like that we were retesting it so quickly. Of course, Friday it bounced again. I think you could use this 200 MA as the gauge. Another break of it, I think we're going to come down quickly to 153s. Will that be the end of the move? I don't know. Could we fill the gap? Sure. But if we do get down into here or press even below, I'll be looking to sell out of the money puts maybe longer dated down around 135. That's the real true range low and the primary dominant trend line. So on another leg lower, I'll be a put seller. Like if we were to come slam down into here, I'll sell some out of the money puts. If you could take out this range high, 160, 155, I'll probably sell some out of the money puts at around those strikes for probably a chicken little way to play for a move back up to 166s. That's sort of my plan with Costco. Here's a yield play. I've never spoken about this stock before. STOR. Now, brownie points for anyone who already knows what I'm about to say. This is a REIT, and it is a REIT that Warren Buffett just bought into, and that's why it was up. It still yields about 5% or so. I like the idea of buying the dip. Yes, this is obviously a risky speculative name, but I'd say it's a lot less risky and speculative now that the king is in it, Warren Buffett. I'm sure he did his homework on it. I'm sure they're going to be able to hold their dividend. I'm sure they're going to be fine. So I like the idea of buying this one on dips, STOR. It could be a good IRA type of a play. Anyway, that's the end of my video here. If you liked it, please retweet it. That is the best way to say thank you, help get the word out. Have a great July 4th, and we will maybe do a midweek video. We'll see how it goes. My guess is it would probably be Thursday, depending on how the market goes. Anyway, have a great rest of your holiday weekend. Happy 4th. God bless America, and long live the Republic. Cheers.